reporting season so far has been coloured by a few major themes, namely the outbreak of coronavirus, and nonetheless, the market just keeps going up.
It does. Well, here to discuss it is the Australia's market editor, Dave Rogers. Dave, look, I'm lucky enough to sit next to you during working hours, which is fantastic. But stepping back a bit, Corona, how is it affecting markets?
Well, the market continues to show this extraordinary resilience, and of course we've got record low interest rates, so that allows the market, if the wheels aren't falling off the global economy, and clearly the coronavirus numbers have improved a little bit over time.
So the rate of growth of new cases,
the market has bounced back, and looking into the figures. The hedge funds, for example, haven't reduced their exposure to the market at all. So
really?
There's been reactions at times, but it's now at record highs.
Given Australia's exposure to China, some would say almost full reliance in an economic sense, does it surprise you how resilient our own markets have been, and even our own companies during this reporting season?
Yeah, it has, and some companies, of course, have had reported impacts from coronavirus, but the market has been fairly forgiving, and they've only basically the market's priced in as much as the hit they've reported. For example, Cochlear says earnings will get down about 5%, so its share price is about 5% off its high, and that's been a market favourite, and people don't want to assume the worst at this stage.
Well, so what happens? Like, we've got next week the big miners, a couple of big miners reporting. They're very reliant on China. Do we think the market's going to look at that?
Well, particularly with the miners, the thought is that Chinese industrial base will be able to catch up in the second half. So and stockpiles can make up a big part of the difference. So for the miners, it shouldn't be such a problem. In fact, the miners are still looking at what to do with the windfalls of all the strong commodities prices and decent production last year. So we've got BHP this week, Oz Minerals, Fortescue, and they're probably looking at fairly decent payouts in terms of dividends and also potentially share buybacks. So the miners are probably, you'd think, would be affected, but that's only going to be if the coronavirus has a long-term impact, and no one really sees that at this stage.
All right, we have some of the majority, I believe, the ASX companies reporting this week. David, what are you looking out for?
Well, so we've touched on the miners, and I think they could be standouts, and Rio Tinto is one that UBS in particular has flagged that they could do a big dividend there, and so
investors looking at capital management.
That's right. But coronavirus impacts will be, any that have had you would think that with the coronavirus has been out there for a few weeks now, and most that have exposures to report, significant exposure, should have reported them by now.
And what about education? Because you'd think that would be a
it's counterintuitive that IDP Education, for example, said it's largely unaffected, and its share price surged last week. It recovered. But a lot of this comes down to how long the outbreak drags on for in China, and at this stage most people think it'll fade out by March, and it'll be kind of back to normal in China. But it's a big assumption with what we saw with the numbers this week, with the case reporting. Suddenly they changed the way they reported the numbers, so we suddenly went from a couple of thousand cases a day to 14,000 as they included cases diagnosed by chest x-ray. For an economic number to change, or something so important to change that much in one day, it makes you realise how fluid the situation, and it's hard to know exactly what is happening there. And the market being on what looks like a record high PE multiple in Australia, it potentially is a bit vulnerable. Earnings estimates have actually continued to slip through earnings season, only slightly. The market's just put a higher multiple on those earnings as Wall Street's hit new highs.
It is extraordinary with these low rates. David Rogers, great to have you in here. Thanks very much for joining us.